My guest today is Dr. Jerry Meyer. He's a PhD in applied mathematics, and he did some research and accuracy testing on TradeShark's software. Dr. Meyer, can you talk about your background a bit?
Sure. As you said, I'm a PhD in applied math, and I've, over the recent years, concentrated my research more in the computer science area, and I'm a professor of computer science at a university in New York. And lately, the last, I'd say 3, 4, 5 years, most of my research has been in the financial area. So I've been developing algorithms in the financial area and publishing them in academic journals, and I even published a piece in Stocks and Commodities magazine last year.
Dr. Meyer, what were you trying to accomplish when you were testing the accuracy of the TradeShark software?
Well, I was doing just that. I was testing the accuracy of the TradeShark software based on a predictive neural index which had a reading of up, down, or not applicable. And based on the up, down, and non-applicable, I came up with very nice results, which were astounding to me, actually, because it verified that the predictive neural index could accurately pick an upward movement in the direction of a 3-day SMA or a downward movement in the direction of the 3-day SMA approximately 80% of the time, which really floored me.
So for those of us who aren't computer or math whizzes, how did you set up the testing process?
I actually went through 50 markets in different categories: Forex, commodities, indices, stocks, etc., and picked half a dozen markets from each of these categories or more. And they were at random, although I must admit I picked a few that I like to trade because of my intellectual curiosity. I like to trade Apple, I like to trade Sears Holdings, I like to trade Euro-US dollar, and all the Forex pairs. So I included the ones that were some of my favorite markets, maybe half a dozen, and the rest I picked totally at random. And the results were incredible. I mean, what I did was I used a TradeShark platform, which was very simple to install and to use. It was very intuitive. For each market, I retrieved information on the open, the high, the low, the close, and the predictive neural index, but I excluded the open price in my calculations as per the formula that TradeShark uses. What they do is they compute a typical price by taking the close, the high, and the low, and averaging that price for that day. So if IBM had a close of 200 and an open of 198 and a low of 196, the typical price would be 198 for that day. And then based on that typical price, we use that typical price to make a 3-day simple moving average of the typical price. And then after I calculated that 3-day SMA, I verified the result. What the predicted result was, if the predicted result was up and the 3-day SMA was higher 2 days later, then it was a correct prediction. If it was down, then it was an incorrect prediction.
What surprised you the most or impressed you the most about these test results?
Several things. One thing, as I told you, I develop a lot of algorithms. And most of my algorithms are lopsided. Either they work better either in the bull case or the bear case. This software was pretty much exactly equal for both the bull and the bear case. That is, when the predictive index said up or when the predictive index said down, the results were very comparable, within 1%.
What does it suggest about the soundness of the software and the algorithm that it's built on?
Well, if I only did it for 3 markets, it may not suggest that much, but I did it for 54 markets and going back 5 years. So that's an incredible amount of data that I checked empirically. And that, to me, shows that it's a very sound algorithm that I have confidence would work on all 2,000 markets if I tested all 2,000 markets.
And you talked about the difference between up and down markets being about 1%, but what raw percentages are we talking about in terms of success rate?
The success rate was about 80%.
It sounds like there's a lot of math going on under the hood here. How much of this do I need to understand to make this work for me?
You don't have to understand anything, but the math that's going on under the hood is incredible. It's, I'm told, a sophisticated neural network with many layers, with feedback loops, that really is breaking edge research, and it's been developed over many years of learning. Neural networks learn.
One of the things that you found was that the difference between the low and the high in terms of success rate was pretty small.
Yes, the range of values of the 54 markets that I tested was very tight range. And furthermore, just from observing, I could tell that the variance and the standard deviation must be extremely small. I wasn't asked to calculate that, but I figured while I'm at it, and I just, on an Excel spreadsheet, once you have all the accuracies, it's a simple formula to calculate the standard deviation. So I did, and it came out to be 2. I also wasn't asked to calculate the median and the mode, but I figured while I'm at it. So I did, and they were incredibly close to the mean, which means to me that more than likely that some sort of a normal distribution, very tight about that 80% number. So most scores will fall like between 84 and 76%.
And what does this mean to me as an individual trader trying to make
that? Means you have confidence that you don't have to check all 2,000 markets. You know that they're all going to be around 80%.
So Dr. Meyer, what was the high and the low, and how did you find that out?
I think Sears Holdings, from memory, was the highest at around 84%.
And what was the lowest?
The lowest was, I believe, 73 percentile, and the mean mode and median were all very close at around 80%, which implies very low variance amongst the different markets, which gives a trader a high level of confidence that no matter what market they're trading in, it's going to be around that 80% mark, which is an amazing result for any financial algorithm. It's different than when you bring back a report card and you get an 80 in algebra. That's not a good grade. But when you get in the 80s in a financial algorithm, that's an astounding number.
Nothing is 100%, but
Correct.
This gets as close as you've ever seen.
Yes, definitely.
So it sounds like you've proven that the software is very accurate, but in practical everyday use at a trader sitting at his screen, is it hard to see that happening, or what does it look like to them?
They can't miss it. The predictive neural index in plain English says up, or it says down, or it says NA, not applicable. And fortunately for the traders, very percentage-wise, it was a small percentage that said not A. I don't remember it offhand, but probably well over 90% was an up or a down.
So as a liberal arts major myself, I could use this software.
Anybody could, up, down.
As every good trader knows that staying out of the market at the right time is just as important as knowing when to get in. So this NA actually tells you when to step aside.
Yes, actually that's true, because according to the neural network, this was a particular pattern, or however they did it, that doesn't show a very strong result either way. And therefore, it's best to not make a prediction, and probably as a trader, it shows you that the market is pretty unpredictable at that particular day.
Dr. Meyer, thanks for being here.
It's my pleasure.
I've been talking with Dr. Jerry Meyer about the accuracy testing he did on TradeShark's software.